Dominique Moerenhout. You are CEO at the European Public Real Estate Association. Thank you for joining us on BiTV.
Yeah, thank you, Luc Etienne, for having me here today. A real pleasure.
The pleasure is all ours. Thank you. As mentioned at the recent EPRA Inside Paris 2023 conference, the FTSE EPRA Nareit Developed Europe Index posted a minus 36% performance in 2022. What are your main takeaways from the European listed real estate sector's performance over the last year?
Yeah, so 2022 was definitely, of course, a very difficult year for the real estate sector, for both listed and unlisted. This is quite clear. High inflation, rising interest rates, and of course, a burning geopolitical landscape has put a huge pressure on the markets. Listed markets have overreacted over the year, and we also started to see, I would say, the private markets going into negative territory in the second half of the year as well, but of course to a lesser extent. So as we know, listed markets always react much more quickly to changing environments. Private markets are also expected to correct further in 2023, and public markets should recover. That's definitely also what we saw since the beginning of this year, which normally should bring both listed and the unlisted market at a certain equilibrium at some point this year. Since the beginning of the COVID-19 outbreak, and in particular also in 2022, our sector demonstrated once again its resilience thanks to all the actions undertaken by the listed companies after the global financial crisis to delever on the one side, but also to restructure its debt. Today, our sector has an LTV of approximately 36% versus over 47% during the global financial crisis. Also a much longer debt maturity. So debt maturity in our sector today stands at roughly 6 years. 85% of the outstanding debt is with a fixed rate, and also our sector is financed at much lower cost of debt, so roughly 1.8, 1.9% versus over 4% during the global financial crisis. So if I would have to summarize this in one word, I would say definitely, yeah, the sector suffered in 2022, but it demonstrated its resilience.
Okay. And also something important as we enter the new year, we are at the end of January now. As European real estate markets enter the new year, we are amidst a lot of uncertainty. Companies and investors be mindful of.
Yeah, so I would say for the time being, the market is to some extent at a standstill for the market. A concrete proof of that is, of course, the number of transactions aborting or just being put on hold for the time being. That's what we have experienced over the last month. And this is partly due to the fact that there is a price discrepancy of roughly 10 to 20% between the buyer and the seller. Financing is also tightening and more expensive. So I didn't say that there is no financing in the market. There is still financing available, but it's definitely a tightening sector for the time being. There is also a certain uncertainty about the evolution of valuations and the impact it's going to have on yields. That will probably also hold off some transactions, at least in Q1 2023. Of course, there is also some unclarity about the world entering into recession or not. Economists have totally diverging opinion about it. If you speak to 10 different economists, they might have 10 different opinions about it. I would say probably the good news today is that inflation has stabilized towards the end of 2022, whilst we might still expect some rate hikes in 2023. Last but not least, I would say that the sustainability agenda remains on top of the agenda for the REIT CEOs and investors. Regulation is moving very fast in this domain, and particularly around the EU taxonomy and the SFDR. The listed real estate sector is definitely at the forefront on the sustainability agenda with very tangible objectives on the E and the S parts of ESG. Let's not forget today that 35% of the built environment in the EU is over 50 years old, and over 70% of the building stock is totally energy inefficient. So at the same time, only about 1% of the building stock is renovated each year. So a lot to do in this domain, and I can guarantee that the listed real estate sector has been very active in this domain for the last decade.
And maybe therefore the question that comes to mind also is having taken these trends into account, what is your outlook for Europe's in general, maybe France's in particular, listed real estate markets in 2023?
Yeah, so looking at the French REIT sector, I would say, first of all, looking back 2022, the sector definitely outperformed the rest of Europe. You mentioned the FTSE EPRA REIT index did minus 36% in 2022. The FTSE EPRA REIT French index outperformed it by 25%, so it only had minus 11% total return in 2022, which was particularly due to the outperformance of the retail REITs versus the other sector. I would say our opinion today is that it is also what we see on the market. There is a real confidence resettling in the market this year. There is today on the listed side a very clear disconnect between the share prices and the operational performance of a sector. Today, the listed real estate sector trades at a 45% discount to NAV, and a lot of investors might see it as a clear momentum to reallocating new capital to the listed real estate sector versus the private sector. This is at least what has been confirmed during all the meetings we have with investors, not only in Europe, but in other parts of the world. That's the feeling and the feedback we received from them in the second half of 2022, also of the first 3 weeks in 2023. And therefore, would have to summarize, I would say, in a few words, what the listed real estate investor sentiment is today is very easy, is that they are strategically positive about the sector, but tactically cautious, taking into account the environment where the sector and the economy is evolving for the time being.
Well, Dominique Moerenhout, thank you very much for this very valuable insight. Thank you all for joining us, and see you soon on BiTV.
Okay, thank you very much, and a good year to everybody. Thank you.